Guys, so it is October 1st today, which marks the first day in the new quarter, which means that yesterday was the last day of Q3, and today is the first day of Q4. I thought it would be interesting to take a look back at the last 12 months to last October 1st and compare and see what prices different assets were at and see what the returns were from last October till 12 months later to this October 1st. It has been a crazy ride in equities the last 12 months. Actually, right here I'm on the S&P 500, so you can see right here was the start of October, and we had a drop in the last quarter of October last year because that is when a lot of the concerns started to get brought up in the mainstream media about slowing economic growth, not only in the U.S. but also in the rest of the world. A lot of problems with China and the tariffs started to pop out at this time. So this was a very volatile and choppy time for the S&P 500 over the last 12 months. We've got a couple all-time highs in that period and a lot of choppy action, as you can see. This is the weekly chart, so each one of these bars represents 1 week. So if we're counting the whole year, there should be about 52 bars from here, which is October, till here. So right now, S&P 500 from last October till this October is only up about 1.5%. So right now it says 1.65%. So under 2% for the index of the stock market over the last 12 months. Now the average is anywhere between 7 and 10%. So like 8% is the average for the stock market for your returns. So over the last 12 months, anybody who was invested solely in the S&P 500 would have gained about 1.65%, a little under 2, and actually not even be beating inflation. So you're actually losing money if you're invested in the stock market over the last 12 months. Now, we did start with the S&P 500, but I had a list of about 9 other assets and stocks and securities that I wanted to go over and just compare what the realized returns were from last October to this October. So next on the list is going to be XLF, which is the index of the financial sector. The index of the financial sector. So right now, actually, in the last 12 months, the financial sector, which includes all of the big banks like Wells Fargo, Citibank, Chase, Goldman Sachs, Deutsche Bank, all those banks are in this index, and they are down 0.8%, so a little bit less than 1%. You can see on my screen here. They are down 0.80 or 0.8%. So also very choppy action here over the last 12 months. Not really a clear trend. You can see it was kind of like a downtrend here, and it's kind of struggling to find its trend. So not looking too good over the last 12 months for U.S. equities so far. So yeah, financials down less than 1%. Third, we have the FANG stocks that I wanted to show you guys, which include Facebook, Apple, Netflix, Google. So I will start out with Facebook. Now, Facebook over the last 12 months since October 1st is actually up 8%, which is on track with the average of what the market is supposed to be. So if you were invested in Facebook, then you had a considerable amount more percent gain than the S&P 500 and also XLF. So Facebook up 8%, and I think a lot had to do with the announcement of the work that they're going to be doing in crypto with Libra coin and that stuff. I'm sure they had other news that propelled their stock up higher, but Facebook not too bad over the last 12 months, up 8%. Next on the list, we have Apple. So Apple right now is actually breaking out a little bit, but let me see what we're at over the last 12 months because we did move up a little bit today. So Apple is actually down 2.5%, 2.44% over the last 12 months since October 1st of 2018. And I'm sure now that the new iPhones are coming out and the new streaming service, they will probably do better over the next 12 months compared to how they did over the last 12 months. So Apple more in line with how the general market, actually less, they were down instead of flat or up. So Apple not too well over the last 12 months, down almost 2.5%. Next, want to go over Netflix because Netflix was one of the worst performing stocks in the S&P, and in the FANG names was the most worst performing stock. So let me show you guys where we're at now. From last October 1st till this October 1st, Netflix is down a whopping 30%, actually almost 31%. So I guess you can say that Netflix is in a bear market. 30% is no joke. People that were invested in Netflix last October are really doing bad. I mean, 30% in the stock market. I mean, it'd be one thing if you were saying 30% in Bitcoin or something a little bit more risky, but you're talking about one of the biggest stocks in all of the S&P and the whole world, one of the biggest companies in the whole world going down more than 30%. And honestly, it doesn't look too good for Netflix in the future now that Disney, Hulu, Apple TV, HBO are all coming out with better, cheaper services that have more things on them. And Netflix hasn't really been doing it for me anyway, so I'm honestly not that surprised that they're down 30%, but it is worthy to keep an eye on. And we're actually nearing the lows of December of last year at 240. So maybe this range would be a good area to pick up Netflix and maybe ride this back to all-time highs if it ever gets there. So Netflix down 30%, doing horrible. Next on the list, I decided to skip Google. It's a pretty expensive stock, and I don't really trade it, so I don't know if a lot of my viewers would be interested. But I picked Tesla instead because Tesla is one of the most talked about stocks, and I guess also a lot of my viewers would be interested in Tesla. So Tesla, very bumpy road over the last 12 months. I remember maybe 6 to 8 months ago, there was a lot of news surrounding Elon Musk, who is the CEO of Tesla, and his tweets got him into a lot of heat with the SEC and with his company. And also there was a lot of manufacturing myths that were coming out that were against Tesla. So I think a lot of that FUD might have made the stock go down. So over the last 12 months, Tesla is down almost 7.5%. But I think that you cannot bet against Elon Musk, and I think that he will probably turn this stock around. And I'm actually not too worried about Tesla compared to as worried as I am for Netflix. So Tesla's still very disappointing over the last 12 months, down almost 8%. which is not good at all for their investors. But it's one down year, and maybe next year they're up 30%. Maybe they can even that out. So that's it for the tech stocks. Now I'm going to move on to Bitcoin, which had a very, very rocky last year. So last year, in October 1st, we were sitting at $6,500 Bitcoin. We went all the way down to 3,000, all the way up to 14,000, and now we're back at $8,300. So from last October 1st to this October 1st, we're sitting at a 26% gain, almost as much as Netflix lost. But Bitcoin so far, out of the names that I listed, has the most percent gain since last October, and there's no surprise. It is, I think, the best performing asset over the last decade, and really no disappointment there for me. I did make a good amount of money in Bitcoin over the last 12 months, so very happy with this 26%, and we'll see if we can make it back up to yearly highs or not. So keeping an eye on that. After Bitcoin, we are going to go to its big brother, its puppy, which is gold. So gold had one of the best years of its existence, certainly the best year it's had in the last decade. Yeah, the best year gold's had in the last decade, I would say. Since October 1st, gold is up over 20%, which is unheard of for gold. Gold barely moves at all. Actually, gold was stuck in this sideways trading pattern for like 5 years now, and we broke out of that pattern, and now you can see gold is up 23%. It was up closer to 30%, but over the last 3 weeks we did drop a little bit. So over the last 12 months, gold is up 23%, which I'm very happy about because I had a lot of gold exposure, including gold stocks and gold ETFs. So let's see actually the gold ETF, how much it went up, because the ETF is 3 times inverse, or not inverse, the ETF is 3 times leveraged to gold. So let me go to the first. 66%. The UGLD is the ticker symbol, up 66% since October 1st. That is the ETF, the leverage ETF for gold. So that right now is beating everyone, but I'm not going to count it because I was just trying to show you guys what gold was doing. So we have 2 more on the list, number 9 and number 10. So I will go over the real estate market. So the real estate market over the last 12 months has been really impressive, actually. Not only because you would expect the real estate to also weaken as the S&P did not perform too well this year, but real estate market from the last 12 months from October 1st is up 18%, which is very, very, very good. Which is way easier than buying a house. This is the Vanguard, which is a real estate ETF. It's a REIT, which means that you can basically invest in real estate without having to buy physical, actual property. So in this case scenario, over the last 12 months, this REIT is up almost 19%. So theoretically, it would have been the same thing as if me buying a house for $100,000 and now me selling it for $119,000. That would have been a 19% return. That would have been the same return that you would have got from the Vanguard index, but without having to put thousands of dollars down without having to pay for taxes and maintenance, without having to find tenants, without having to do all of that. So that's why REITs are very good if you're interested in real estate and investing in real estate instead of actual physical property. So, very good compared to the general market, beating it by almost triple. So, all right. Last on the list is oil. Oil, starting from October 1st, literally the day that I'm picking, literally Q4 of last year, oil went on a complete sell-off. Now, I have no idea why this happened. I wasn't that invested in oil back 1 year ago. I wasn't paying attention too much to why this was happening. But nevertheless, oil from 12 months ago to where we're sitting at right now, down 30%. Now, I don't know how that affects the economy or government or whatever, but I just know oil being down 30% helps my wallet a lot, because that means that gas prices were also down about 30%. So I don't really remember correctly, but I guess this time in October last year was when we were hovering around $3 gas, $3.20 gas. So thank God this did go down. And thank God I wasn't invested in oil, because that would have hurt also. But oil down a lot, 30% over the last year. Not very good. So what I did was I wrote down the 3 worst performers of the year of the list I had, and the 3 best performers of the year. I'm going to start with the worst performers. So the 3rd worst performing stock out of the ones I mentioned was Tesla, and it was down 6.7%. Number 2 was Apple, which was down 4% almost, and that I had as the 2nd worst performing, and the worst performing, of course, is oil, down 29%. Now, on to the good stuff. For the best performing stocks of the last 12 months, and not only stocks, but also some commodities, we have coming in 3rd, real estate, which was what I just pulled up on the screen. Real estate did very well over the last 12 months, but it's looking a little bit like it's about to fall off a cliff here. We have some resistance up here at $94. So we'll see if this holds, or if we'll be revisiting the $80 range, $85 range. So be wary with real estate. Even though we went up so much, it doesn't mean that it's going to keep going up. So yeah, real estate, number 3. Number 2, coming in 2nd, we have gold. Gold was the 2nd best performing asset out of the ones that I mentioned, and it was up 24% in the last 12 months. So gold, the reason it went up is because of a lot of the concern in macro economy globally. A lot of central banks are buying gold, including China and Russia and other big superpower countries, and also because of the monetary the shit that the Fed's doing right now is scaring a lot of investors, because they are lowering rates for no reason. So that is just pushing gold up even higher, because it's basically a safe haven asset, gold. So when people start thinking that the economy is going to go down, then people start investing in gold. So gold up 24%. And for our winner, of course, we have a Bitcoin up 26%. It would have been closer to 100% if we didn't get this big drawdown here. but up 26% on the year. Bitcoin, which I am very happy about. It is the asset that I trade the most and the asset that I've made the most money over the last 12 months. So thank you to Bitcoin and thank you to my risk management for being able to go in and out of these trades and make money along the way. So that's it for the video. I thought it would be neat to compare how these assets did over the last 12 months, because a lot of times people have a certain idea for how things are going, and then when you lay down the facts and show people that certain assets aren't doing as well as they think they are, then that gives a different perspective. A lot of this stuff that people are reporting on the news are saying about how strong our economy, how well we're doing, and all this stuff. If we were actually doing so well, why in the last 12 months is the S&P 500 barely up over 1%? Why is Netflix down 30%? Why is gold, the safe haven asset, the best asset over the last 12 months, up over 20%? So yeah, those are just some questions that you have to ask yourself when you're looking at the numbers and looking to see what were the best performing stocks over the last 12 months. Hopefully you enjoyed the video. If you did, leave a like. It'd mean a lot, and a comment. Let me know what I'm doing good and what I can work on. I'd be happy to take the constructive criticism. I thought this was a good idea for a video. And yeah, so if you're new to this channel and you enjoyed the video, please follow in any of the channels that you're watching on now. I post on YouTube and LinkedIn and Instagram and Twitter. So if you are more comfortable with either of those social medias, then I'm on all of them. So if you would like to follow, I'd really appreciate that. It's under Supreme Charts. And if not, that's okay. I forgive you. But I will be posting content like this that hopefully you guys enjoy, hopefully you guys learn from and take some value from. So with that being said, I hope you enjoy the rest of your Monday. I hope you dive a little bit deeper into trading and technical analysis and learn a little bit more. Maybe make some trades today. And yeah, if you have any questions, let me know on DM, and just stay tuned for my next video because I'll be posting a lot this week.